Hello everybody, welcome to another Rosie Murphy video, and I think that you will find this interesting today as we try to tie together the events of 1929 in the aftermath of the great stock market crash of 1929, the onset of depression, and social experiences of that time and governmental intervention, and contrast that to today, all in the hopes of finding out whether we are on the verge of another black swan event here. And remember, the corona COVID-19 would be considered what's called a black swan event in economics. And a black swan event is simply something that comes along that's A, unpredicted, and B, has far-reaching and potentially devastating consequences when it occurs. Well, we can certainly see that COVID-19 probably qualifies what they call a black swan event. Can there be another one coming up? There very well could be. The thing to remember with this, though, and the thing that you absolutely have to bear in mind is in 1929 and after the Great Crash, many people, many well-educated people, professors at Harvards and Yales and university economists and Federal Reserve economists, many people that studied economics at that time, believed that the Great Crash was just a period of adjustment on too much over speculation. And they had every reason to believe that after a normal period of measured maybe 3 to 6 months, that things would align themselves again properly and the United States would recover just as it did after other depressions that have occurred. Most of them tended to be less than 1 year in length, and when they were over, things went back to a new boom cycle. Well, could things be different? Well, the thing that you have to also bear in mind is that 1929, the magnitude of the decline that occurred from September 3rd, 1929 until November 15th, 1929 was on the order of 50%. Our first spike down in 2020 was almost 39%, so almost equivalent. And much like 1929, 2020 has seen a very sustained recovery that clawed back about 50% of the initial drop, at which point many people in 1930, when that big rally ended off the bottom from November and the market rallied till April of 1930, the market clawed back 50% of what it lost, and people were like, happy days are here again. Some people, but then of course prices started to drift off, and the whole decline of stocks was not completed until June of 1932, at which point the stock market, as measured by the Dow Jones Industrial Average, had lost 90% of its value. What was different, and what could be the black swan event this time? Well, we already know that some people think it's a period of adjustment. We get back to work and everything will be fine. But remember, in August, specifically August 14th of 2019, the market did something that it rarely does in the bond market. We had that inversion between the 2 and 10-year notes, where the yield on the 10-year note, you're lending money to the government for 10 years, went below the yield that you could get on the 2-year note. It rarely happens, because normally the longer you lend money, the higher the rate that you expect, because anything can happen over 10 years. Many more bad things could happen over 10 years than 2 years, so you expect more compensation to be lending your money for 10 years. Well, that reversed on August 14th, 2019. And for those who are market historians and economists, that was a real signal that there's some underlying fundamental problems underneath the economy, much that some people pointed out even before that, the slowdown in China, factory production, the slowdown in sales here in the United States, just like some people that really dug in deep in 1928 and 29 saw that things were slowing down in the face of a rising stock market. There were car loadings started going down of railroad cars. There was industrial production started to decline. Unemployment started to rise. But people still believed, all in all, that it will be a short-lived event after the crash, and the economy's in great shape. Very few people predicted the abyss, the absolute fall off the cliff that characterized the Great Depression, much like today. People poo-poo the idea that this will be something that leads to trauma that's measured in years here. I'm not so sure. Generally, I have found that the larger the magnitude of the initial earthquake that splits the earth, so to speak, and puts a big crack down it, as the collapse of February and March of 2020 did, the harder it is to dig out, and the more there's a warning that something much bigger is taking place that will probably take years. Panics of that magnitude are very, very rare. And I can't think of any market collapse, and I do mean collapse of 38% in 3 weeks or whatever, that did not herald some type of really tough time for whatever that market was, whether it was corn, whether it was silver, whether it was gold, whether it was stocks. Now, what could the other black swan event be? Well, some people have suggested several of them. We already see the pushback of people against what they consider overreaching government authority in terms of not being allowed or being discouraged to leave their homes, not being able to open their businesses. They've been disrupted from their daily routines and they miss it. And they're starting to push back against authority. Eventually, some people will make a case that anarchy could begin to reign again, especially when people take to the streets and protest loss of jobs, protest loss of government support, protest the futility of trying to dig out of this hole. People get frustrated. And people start to march and people start to demand that governments do something. That's one possibility. We already see the early seeds of that, but the black swan event that I think could be coming up is the end of the line in terms of the ability of the federal government, the United States Federal Reserve and the Treasury, to bail us out. We've been a bailout nation for over 50 years. Every time the train derailed a little bit, they pumped money into it. 2008, 2009, all the way through being the last time, the Great Recession. They're following that same playbook today, but the magnitude of what they're doing is on a scale 10 times larger than that time. They are literally supporting and taking ownership of about 40, at this point, about 35 to 40%. And today they want to underwrite the oil and gas markets too, because they're of the belief that this will be a short-term phenomena and oil and gas prices can't conceivably be down for long. Well, they could be. They could be, especially if we're embarking in the early days of an economic depression. The black swan event is government's inability to turn things around. No matter how much they try to pump in, no matter how much they try to do, it's all good in 3 to 6 months because people are feeling good because they're still going to get paid and they'll be paid a bonus not to work. Most people enjoy working. There's a certain amount of fulfillment that comes from that. Okay? Most people assume that shops will reopen, hotels will go gangbusters, cruise ships, travels, vacation. High-end electronics and things will be as good as ever. Amusement parks, everything that defines the American experience. Restaurants will be good. But what if it's not? What if it's not a matter of just underwriting it with buying all the bad debt in the world and putting it into a big pile? What if there's bigger problems underneath of it? Remember, the end of the line is defined as opposite to the beginning of the line of government intervention. In 1929, all the Federal Reserve could do was raise or lower the borrowing rate at their window. And when stuff hit the fan, they just stepped back and let the pieces under Hoover, and in history, just let the pieces fall where they will. Let businesses fail, let things liquidate, let people get laid off, let all of the rottenness be kicked out and burned out of the economy. All the rottenness that didn't deserve in a Darwinian way to survive. Get rid of all those rotten timbers and foundations of crappy businesses. Burn them all. Yeah, there'll be some short and intermediate term pain, but there'll also be a stronger foundation for building the future of the country. There was no Social Security. There was no welfare. There was no Section 8 housing. There was literally nothing to be between a person and potential extreme hardship. That all changed in 1933. Whereas charities and local governments had been charged with the responsibilities of feeding and taking care of people, in 1933, the federal government under Roosevelt took command of the situation and for the first time in history opened up the federal coffers of spending and deficit spending, huge amounts of borrowings and fiscal deficits every year as far as the eye could see, to try to spend the way out of the Great Depression. And of course we know arming for World War II is what finally ended it. Because 8 years on the Depression in 1940, unemployment was still 15%. Yeah, down from 25%, but it was still high. And government had been doing everything, creating the Agricultural Adjustment Administration to help farmers and plow up fields and slaughter hogs and destroy milk and cheese, and to do the Civilian Conservation Corps and the Works Project Administration to put people to work. In other words, they were the first ones in that era to throw the whole kitchen sink in. Okay? And in times during the 1930s, Roosevelt got scared, turned white as a ghost, and just would say, man, this just has no end. But the important thing that happened at that time was that people began to appoint and look to the federal government as the one that had the keys to ensuring the future prosperity of America. And that's come through over 90 years to the point where people have seen, as in 2008, 2009, that the government seemingly has the ability to make things good again through tremendous purchases of crappy mortgages in 2008, 2009, and today. Crappy mortgages, crappy oil and gas loans, crappy retailing loans, crappy every car loans, student loans, everything under the sun. The only place that everybody looks to now, where nobody looked in 1929, everybody looks to the federal government now. That is 100% change from 1929. And you can think of it as a railroad track that has two ends of it. 1929, zero government. 2020, 100% government intervention in everything. Printing money like mad, buying in lousy debt, underwriting every small and large business in America. Could we be at the end of the other line where our faith in government starts to now go down? Faith in the Federal Reserve, faith in the Treasury, to be able to fix the situation we're in now? Well, remember, a lot of people still think COVID-19 is the only problem if people look deeper, will say, hey, the bell was rung in August of 2019 when the 2 and 10-year yields inverted, signaling a recession. A foolproof warning, a reliable warning, long before there was ever any infection or anything the world had ever heard of COVID-19. There was already warning bells ringing back then. The Black Swan event is, of course, when we get to herd immunity and people start going back to work and going back, that things may not improve for a very, very, very long period of time. So we shall see if the loss of the ability of the federal government to engineer prosperity becomes the next big Black Swan event. I hope you enjoyed this discussion. I welcome your comments in the comment section down below. Of course, your thumbs up are appreciated, and I always appreciate you taking time to take a few sojourns into the world of macroeconomics. Thanks, everybody.